afternoon. How are we all doing? Morning even. Not even afternoon yet, is it? How weird. It's morning. How's everybody? Morning, Senji, Rodrigo, Steve, Franco, Ross, Sweetheart, Monkey, Evil. How are we all doing? All ready for the interest rates for the pound. So today is interest rate day for the pound, 12 o'clock in 10 minutes-ish. Bank holiday in Europe. I haven't even looked at the DAX today, but probably didn't do anything. So we've got the interest rate coming out at 12 o'clock, and then 12:30 Bailey is doing the press conference. So potentially this is where we're going to get the movement this afternoon. Usually somewhere around about 12:45, 1 o'clock is where the market will generally tend to take off if there is something said that's important. But at the moment, the market is looking at August stroke September. It seems to be coming forward a little bit more to August now for the interest rate change. So that's what we're looking for today, whether or not Bailey confirms August or September, or whether he's more bullish about moving it forward or more bearish about pushing it backwards. So we'll wait and see what happens. We don't tend to, it's virtually 99.9% guaranteed we're getting a 5.25. Famous last words. We're not the Swiss, but it's very unlikely we'll get anything different there. If we do, the market will go nuts. But the thing that's potentially got the opportunity to move the market when the rate comes out is this part here, which is the votes, which is for how many want to increase, decrease, and stay the same. So if it suddenly gets a large number unexpectedly here for wanting to decrease or increase rates, the market will read that as, hey, it looks like they might push it back or bring it forward even before Bailey speaks. So that may well choose to make a large move in the market, which is a knee-jerk reaction, but that could easily be undone by Bailey. So that's the focus. This is where you're going to get the volatility, and then we'll see what happens. This afternoon, we've got 130 unemployment claims for the US as well. So there's potential for the US to move. We've got Macklem speaking later, although I doubt the market will move much off the back of that because we've got unemployment rates tomorrow for the CAD. And then we've got the bond auctions later, which could drive a load of money into or out of the US. Be very interesting to see how much bond auction purchasing goes on by Japan there. But we will see. We'll find that out later. This morning's news, not an awful lot overnight. There's a load of talk out of Bank of Japan, again, reducing bond purchases, talking about FX stability, the usual stuff, nothing exciting. However, if you look at the yen today, we're still pushing on the yen. So the second intervention level, we are approaching that high, which was the pullback on the second intervention. So this is where I would expect selling to start happening on the US dollar yen if we manage to get there. The New Zealand dollar yen has completely filled the gap. We've got a reversal alert. It's broken the high of the second intervention. The pound yen, not there yet. The euro yen, just got there today, actually. So that's just got to that high. Swiss yen has already done it. We're about to get a reversal alert on that one. CAD yen, not there yet, and neither is the Aussie. Oh, no, sorry, the Aussie is there. Hasn't got the reversal yet. So this second intervention, what happened on the previous intervention was we got a couple of weeks of this waiting for the market to decide what to do next, absorb the information, and then it decided to buy the yen. So we'll see what happens, but this is very similar to what we had before. Nothing much until a couple of weeks after the actual event. So other than that, this morning, nothing exciting. A load of stuff, whatever this crap is that this bloke keeps posting. It's just annoying. Completely eats the feed up. Hunt's speaking at the moment. Interesting. We might get some movement out of this as well. So we'll watch the pound US dollar this morning and see where that goes. I've got a long on this at the moment, so it'd be nice if we get a nice big spike on the pound, but we'll wait and see. Morning, Nav, Amy, Mumo. So yeah, so that's the news for this morning. So interest rates on the pound are at 5.25. Inflation currently sitting at 3.2. It is coming down gradually. We're close to breaking that 3 level, which will bring us back down in line with where we are with the euro and the CAD. So everything's going in the right direction for us at the moment. However, we usually tend to follow the US, and the US is bouncing, as we know. So I suspect what we'll get out of Bailey today is this seems to be going in the right direction, not quite as fast as we would like at the moment. We're cautious about what is going on in the US. We need to see this get closer to our 2% target before we consider reducing rates. However, we won't wait until 2% before we reduce rates. Pretty sure that's what you're going to see in the feed in the next hour. So unlikely, I think, that we'll get a massive move today, but we will get some volatility, hopefully. So we'll see what happens. I've closed out a couple of positions today as well. So the... What did I close out today? Euro odd. And, Euro odd and Euro US. So a couple of Euro trades. So Euro odd was there. That was an H1M5 mean reversion entry from yesterday, straight down into propulsion. So I closed that out. And I closed out the Euro US as well. That was kind of, that one was there. Why did I take that trade? No idea. Can't remember why I took that, but anyway, so I took it off. Weird one. Anyway, money's money. So I'm just basically anything that's in profit at the moment. I'm just trying to get out of ahead of the news. Euro CAD I've got on as well. I've got a little bit of profit on that. In fact, what I might do is just stick a trail on this because we might get a bit of movement. So I'll stick a 90 pip trailer on that top position. So I can always add it back on again. Just in case we get a big reaction on the euro as well. I might as well just bank that $500. And then if it pushes back up, I'll add it back on again on the way down. There's no point in letting it go. Right. So other than that today, ADR wise, there's nothing. So nothing's hit ADR today at all. You don't tend to find an awful lot of movement ahead of interest rates because obviously the market's waiting for interest rates. So nothing's hit there. We've got some weeklies. We're on Thursday. These are all yens basically. So US yen, New Zealand yen, Euro yen, and CAD yen. They've all hit their weekly ranges because we're pulling back on the propulsion move from the intervention. So shorts. So yeah. So nothing particularly exciting there. And RSIs, there's nothing really extended on RSI at the moment. We've got the CAD yen and US yen, obviously been just grinding basically, so that's still extended. Slight divergence there. New Zealand yen on the 4-hour, big strong push up, and pound New Zealand is the only extension that is not related to the yen. I'm long on this one at the moment. 2 positions. Looking to get out on the completion of that propulsion gap there. Could well add up, come up to there, but you can see it's a massive, massive, strong rally down. not undone any of that yet. So I'm hoping that we get Bailey rally the pound today. That would get me out of that one as well. So just looking for a move up into propulsion, basically. 150 ADR. So that's easily achievable today on the news. If we get anything exciting, we will see. So we watch the pound US dollar. And we will see where this goes. What's my TP on that? Oh, that's tiny. I'll go for a bigger TP, basically, just in case we get a ridiculous spike. I don't think we will, but we'll see. Right, we got 50 seconds. Morning, Mark. Morning, Blue Trader from Pontevedra. Little bit cloudy, no good. It's nice here, I think. I leave the office, so I think it's nice. Tune in tomorrow for your weekly, your daily weather update. Afternoon, Kennelly. Not quite. We'll be in 20 seconds. So we'll see what the votes are. News over here. Nice big spread. So a little bit of a negative spike on the pound. Numbers haven't fed through on financial juice yet. Big negative reaction on the pound. Okay, so the hike was a 0. The cut was a 2. Okay, so one extra member voted to cut rates than forecast. So that's why that pound has dropped there, because out of the 9 members that vote on the rates, one more than anticipated asked for a rate cut, which obviously is going to be bearish when the rate cut comes. However, that's not happening until August. That doesn't give any indication as to when. It just means that they're getting slightly more bearish on it, which we know they are, because we know the cut's coming when that updates. At some point. So yeah, so negative move on the pound initially. That's probably just going to be a spike. There we go. So it's a 0.27. So we were expecting all members to vote to hold rates. 2 of them actually voted to cut rates, which was unexpected. So that means they are getting ready to obviously to drop the rates. So when Bailey speaks later, if he confirms that there's a rate cut coming and it's definitely going to be August, or any indication that it might be July. So, for example, if he gets asked about the timings and he says, well, as long as we're getting down below that 3%, there's a possibility we may bring rates forward earlier. And then the next CPI number comes out negative. Obviously, the pound will drop faster. So, that's the initial knee-jerk reaction, is the market thinking potentially bearish. But I suspect it will be back up there within the next half an hour. So my terminal seems to have frozen. No, pound US dollars just stopped. So yeah, that's retracing back up again a little bit now. So all we've done is pop back down into these lows again. So just a knee-jerk reaction. Nothing exciting. My technical analysis suggests shorts in the pound, but it's not aligned with the positioning of retail traders. Probably not. Technical analysis doesn't make any difference when there's news because it just gets trumped. So the majority of the market is, so we're short pound CAD, we're short pound yen, short slightly pound Swiss, long the pound US, long the pound odd, long the pound New Zealand. So real mixed bag of sentiment on the pound at the moment. Euro pound is short, meaning long the pound. So the majority of the market, that's pretty much a 50-50 split, isn't it? So you've got one neutral, 3 sells, 3 buys. I.e. market hasn't got a bloody clue. Or rather, retail hasn't got a clue. So yeah, can't pay any attention to that. Right, so we'll wait for Bailey to speak. We'll see if there's any initial information that comes out in the monetary policy summary, which is what's being printed on Financial Juice now. Ramsden and Dingra voted for a reduction to 5%, so 0.25% reduction. Moving in the right direction. Sees inflation at 1.9 quarter 2 2026, 1.6 quarter 2 2027. Why are we looking at over a year in that? Got nothing to do with anything. Pointless. 4.8 quarter 4, 4.3 quarter 4 2025. So we're looking at 0.5% cut by end of year. So it's 2 rate drops. The current forecast. Okay, so nothing particularly exciting there that we don't already know. Right. So just a case of waiting now, basically, for Bailey to come out and talk and see what he thinks the projections are for changing rates. So there's nothing much else to look at the moment today, because obviously we looked at every single pair yesterday. There's no point in going through every pair analysis again because we went through it all yesterday. Not an awful lot changed yesterday, as you can see. So we didn't really go anywhere yesterday on most instruments. We had a couple of ADRs, but the vast majority of yesterday was very, very, very sideways. So everything's kind of where it was yesterday. We had a bit of volatility. There's an ADR hit there on the euro pound, completely undone. So again, no real movement to speak of at all yesterday. So I'm not going to go through every pair. If there's any pairs anybody wants to look at specifically, let me know. But I'm not planning on doing a full analysis today because, as I say, there's nothing much else new to look at. As you can see, market is still very, very, very sideways. ADRs are still very, very, very low. Yeah, I mean, we are really contracted. ATR on the hourly, that is. Should we look at the daily? But you can see the daily ranges. This is the normal daily range on the Aussie dollar Swiss. We're still all the way down. So, you know, everything is really contracted, really stuck at the moment. Very little to look at of any interest. Afternoon, Neo. It's time. Aussie dollar CAD. Aussie dollar CAD sideways. I'm out. So I got out of this yesterday. If you remember rightly, yesterday we looked at this one. I got out. I put basically a break even on it yesterday. So it's flat, totally dead. This was an H1M5 mean reversion entry from last week. Wednesday, Tuesday, Monday, Friday. But as I said, we sat sideways for 3 days on it. So basically yesterday I put a break even on it. If it hasn't worked within 3 days, it's not working, is it? Yeah. So RSI had returned to below the 50 level yesterday. Relative strength completely dropped off. There is no move. So I'm out. So if you're still in this, up to you if you want to hold it, but it's not going anywhere. Yeah. So very, very nicely contracted at the moment. It is bearish. Look, it's a bearish wedge. Bearish wedges break to the downside, obviously. So there is a good chance it will break down, but it could obviously break up. This is going to happen this afternoon when we have the Bank of Canada speaking. So Macklem speaking later on at 4 o'clock. And then obviously we've got the unemployment rate for the CAD tomorrow. So this could go either way. Absolutely go either way. So, don't know. Got the big propulsion gap target to the downside. We've got another move there to the downside as a target. So more bearish than bullish, but stuck. You know, this is the problem. This is, I'm being ruthless with these trades at the moment, whether they're in profit or loss. If something's just not going anywhere for 3 or 4 days, it's not a setup anymore. It's not a setup. Yeah, we're looking for moves that undo themselves like that. Yeah, this hasn't undone itself. They're not taking profit on it. They're accumulating. So market spends its time accumulating a position, and then it will drive the position in the direction it wants to make money. If it's pushed and accumulating, it means that the buyers are holding the position up. There's no reason for them to drop it. They need to take profit on it, and it will continue. Same as that. May or may not happen, don't know. But it's not a mean reversion trade. It's flat. Dead. So, a moot. Has oil put in the start of a reversal? I don't know. We had oil inventories yesterday. As forecast. So inventory's down, which means supply is constricted. That was the oil news. That was the news yesterday on oil. So broken back out above that high. You're watching that level. This is 125 ADR today, if it was to get there. Oil. I had a trade on oil in anticipation of more movement in the Middle East conflicts, but it hasn't happened. So we've retested that $76 level. God, that gap still hasn't been filled. I suspect it's coming down to do the gap fill. $73 a barrel. So we'll probably just pull back on this leg and carry on down into there. Then potentially go up. But I wouldn't hold up much hope for oil moving forward. It's not in demand anywhere near as much as it was. They reckon that oil demand is going to continue to go up, but that's the Saudis saying that. Of course they're going to say that. They want it to go up because it's their main export. But we're not using it anymore. You know, you can get a car in the UK now. There's multiple cars in the UK now that you can buy brand new for 250 quid a month that will do 300-mile ranges. Yeah. There is absolutely no point in buying a new car now that runs on petrol. This is the UK, whatever in the rest of the world. But it's just not what we're going to be using moving forward. And the vast majority of oil sales are for refinement into petroleum. We're not doing it anymore. So demand, I cannot see, as the Saudis say, increasing. Yeah, we've got the largest manufacturer of electric cars on the planet, BEAD, now supplying the UK as well. BYD, everywhere. Tesla, screw Tesla. BEAD, half the price, just as good quality, better mileage, just better cars, half the price. Why are we going to suddenly buy Teslas? We might as well buy BYDs or BEADs, whatever you want to call them. And there's another new manufacturer just coming out. So the demand for that it's a supply and demand driven instrument. The supply is dropping. The demand is dropping and supply isn't stopping. So if you have more and more and more of it and less and less people want it, you have to sell it cheaper. Therefore, the price comes down. The only saving grace for oil at the moment is that the US dollar is going to start to drop at some point, which will help it, but don't know. I can't really see it. But intraday, do what you like with it. Got the same same chances as anything else of going up and down, isn't it? That's interesting. Okay, so the Q4 projection for CPI is 2%, which would indicate that the interest rate will come down fairly quick. So that is, but it doesn't help. But yeah, so we'll see what happens. Don't know about oil. Have you ever used volume in any of your strategies? No, because there is no volume in Forex. So you can't use it. You can in futures, but not in Forex. There is no centralized volume. So it's a useless thing to use. You can use volatility, which is obviously what I use, ADR. It's the closest thing you'll get to monitoring volume, ADR. But you can't use volume because there is no centralized exchange, and the vast majority of Forex transactions are over-the-counter transactions interbank, which you never even see on a chart. So there's no... you can stick the volume on your chart, but it's not... It is the volume supplied... Can't even see it on mine because it's the wrong color. But it's the volume supplied by your broker. So it's not going to help you in any way, shape or form. This just tells you how much volume is going through your broker. So if you've got a broker with 100 clients, you're going to get a totally different volume to a broker with 10,000 clients, to a totally different volume with a broker which has got 100,000 clients. Yeah. So if you've got a broker with 50 clients in who are focusing on stocks and not Forex, you won't get any. So it's not any use. I mean, people try and use it. I mean, you can use it if you want to, but you just have to be aware that you're not seeing anything. You know, it's like your broker saying, wow, we just taken a load of orders for US dollar Swiss longs. Good for you. Another broker over there goes, everyone's short in the US dollar Swiss. Who's right? Who's wrong? Both brokers are going to have completely different information, aren't they? Whereas with futures, every single transaction that is conducted on the futures market goes through the Chicago Mercantile Exchange, including mine, and every bank. So you see every piece of order there that is in the market, which is why volume profile is used in futures. A volume profile indicator is useless, yeah. But anybody that's selling you a volume profile indicator on MT4, of which there are loads, won't tell you that. The only indicator that is slightly useful on Forex from a market profile perspective is TPO, which is time and price. But all that tells you is, so for example, a TPO indicator, if you had a TPO indicator here, it would be like that. And then you would have another bulge there. You would have a nice big bulge there. and you would have virtually nothing here. Yeah, because price didn't spend any time in that location. It spent a lot of time in that location, and it spent a lot of time in that location, and it spent quite a lot of time in that location. Yeah. So all it measures is how much time was spent at a different price point. Yeah. So if something is accumulating and then breaks out, you'll get a TPO bulge, like a volume profile bulge, where it accumulated. I have an indicator that shows me where the breakouts are. I'm not interested in the accumulations. I'm interested in where did the breaks happen? Where did the banks start the move from? Yeah. So this blue line here, which is the propulsion gap indicator, shows you the breakouts from time and price stagnation, accumulation breaks, large bank orders. So you can use that if you want to, but it's the same as anything else. I've traded with volume profile. I've traded with TPO. I've traded with everything over the years. This purple line is a monthly high. This black line is a weekly high. This is a monthly low. This is a monthly low. All volume profile is, or TPO profile is support and resistance. When you hit that, it will either have limit orders trigger to drive away from it, or it won't. So it's just an area you make a decision at. Yeah. This is an area you make a decision at. This is an area you make a decision at. That's an area you make a decision at. Pick an area to make a decision at. The odds of your decision being correct are exactly the same. It's just an entry mechanism, if you like. It's support and resistance, the same as every other support and resistance. The fact that time might have spent a long time here, yeah, and then it pushes away, when it gets back to there, it may well bounce out of it, but it will bounce out of it because the large orders from the banks are being added to, not because of the TPO profile. This is what, look, the reason isn't because of the TPO profile, which you will see there. The reason is because of the order that the banks placed, which is why I think this is better, because it shows you where the banks have been. That's where they go back to, which is why we use it, because every time you see one of these grey ones, it means it's filled. 100% of them are filled. That's going to get filled. That's going to get filled. Yeah, market is going to come down to here at some point. When, I don't know, but you know it will with a very high degree of probability. A TPO profile will show you a large batch of orders sitting there. That is the move. The fact that they sat there for ages, I can see it on a chart. I don't need a bulge to tell me the market sat there for ages. There's a load of candlesticks stuck in that location. This is much more useful, I think, than that. But it's as close as you'll get to volume profile in Forex, because you can't use volume. And the same as, all the other indicators that are used in futures to do with like point of controls, value area high, value area low, all used an awful lot in futures because you're trading off of volume areas. Big pockets of money, basically, is what you're looking for. So a big pocket of money sitting there and a bank moves away from it. It's because the bank has moved that money into profit. It will defend that profit with its life in exactly the same way as this will. So value area high, value area low, point of control are all very, very important. But you stick them on here related to volume, they mean nothing. It means where's your broker been trading? Doesn't matter. Your broker's candlesticks will look the same as this. The volume your broker has in that candlestick there will be completely different to the volume another broker has in that candlestick. They will paint the same thing, but the volume traded in there with them and someone else, that little line you get down at the bottom of your chart, will be totally different. So, it just doesn't work. Are you trading the indices on futures? I trade indices on CFDs, yeah. not buying anything, just browsing for ideas. I've coded a small point of control indicator that takes X of the 1 minute candles and draws a line where the highest. Don't know. So far, it looks exactly like support and resistance. It is, yeah. I did on demo 11% a month as an average in the last 5 months. Good for you. Thanks to H1M5, I presume, yeah. Want to start testing SIH now. Could you approximate a percent you do monthly? No. It's discretionary. So no, I can't approximate anything on it. Short answer, no. Right. What's the time? We've got 5 minutes. So I've covered everything I need to cover today because we're literally waiting for news. So we're going to wait for Bailey. Just to update you on the RSI2 strategy that I've been back testing. I've completed a load of back tests, a load of system parameter permutation tests now, using multiple exit methods, entry methods, using all sorts of stuff. And I've tested it on loads and loads of different instruments. God, why can't you grab the top of that window? So there's loads of 19,000 tests across loads of different Forex currency pairs. 1, 2, 3, 12. So I've tested 12 different currencies now with 20,000 tests per currency. And there's quite a large deviation in results on a couple of them, but the vast majority have somewhere in the region of 14 to 16,000 permutations which are profitable out of 19,000. So it looks very, 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 very robust. My problem now is analyzing all of this information to find out what the hell to use. Because exiting end of day works, exiting with a trailer works, exiting when you hit a monetary amount works, exiting when you hit the opposite end of the signal works. It all works. So basically, the upshot is the RSI2 strategy. If you closed your eyes, pressed the button when RSI2 got extended and got out in any way, shape or form you fancied, doesn't matter, you'll make money. I've got to figure out now what is the best confluence between all of these exit strategies. And what I might do is use different exit strategies on different pairs to see what happens. I also want to test gold and all of the indices with it as well. And probably oil as well, just to see if there's an edge on that. But the main things that I found with the RSI2 is it doesn't work on the Aussie New Zealand. 164 of the 19,000 permutations were profitable. Everything else lost money, which is interesting. So Aussie New Zealand RSI2 just does not work. It doesn't work on Swiss franc pairs either. The vast majority are losses. And it doesn't work on the yen pairs. The vast majority are losses, which we kind of know because the Swiss and the yen we know are trend monsters. And incredibly volatile. Yeah. So when they start to go, if it's a safe haven run, what moves? The Swiss and the yen. So if there's a safe haven run on a daily chart and it goes like that, as it does for days when we have problems, it will eat your account. So, it kind of looks like, as I suspected, we exclude Swiss franc, we exclude yen, but it seems to work absolutely beautifully on pretty much any other FX pair, apart from Aussie New Zealand. So I want to figure out why Aussie New Zealand is an outlier, and it doesn't work. I can test it on gold because I've literally just downloaded the data. I can't test it in here though because this account hasn't got gold in it. I will test it on gold as well to see if there's an edge there. It's just a US dollar cross. So in theory, it should work. However, gold is volatile, as is the Swiss and the yen. So there is a possibility it may not work on gold, but we'll find out. I will figure it out. So I'm just going to watch the pound US dollar on the hourly while Bailey is talking. Which he's not at the moment. Oh, what happened there? Wrong one. So yeah, I'll test it on that and see what we get. But yeah, everything else seems very good. It's just a case of picking an exit strategy. So if you sort by return on drawdown on all the pairs, you sort by drawdown. So if you go for the lowest possible drawdown, it is a case of just get in once and get out at the end of the day when it's in profit. Simple as that. So you get in, you wait, you get out when it's in profit. And that seems to be the way to trade it. Exit end of day. Even with this one, you can get in multiple times and exit end of day, even if it's not in profit, and it still makes money. Because obviously some days it's massively in profit and some days it's not. But exiting end of day gives you the lowest drawdown. Yeah, we're looking at 2% drawdown on account. Absolutely tiny. This is only using $100 risk as well. So 5% drawdown on account there, exiting end of day. GA, 10% drawdown, exiting end of day. So end of day exit seems to be, if you want to approach this with the lowest possible drawdown, exiting end of day is the best thing to do. If you want to get the highest possible profit, it's not exiting end of day, not using a trailer, it's using a monetary amount to get out. So you exit at a 4R, in this case it's a 2R target. A 2R target. So anything between a 1.5 to 2R target will generate the most profit. But it will give you much higher drawdown because you will be sitting in trades while you're waiting for that monetary target to get hit. So much higher drawdown. So it seems that the exit strategy will determine obviously drawdown. So what I'm going to do is hopefully put together an analysis on it and say, right, well, if you want low drawdown, this is how you need to get out with your exit strategy. If you want high profit, this is how you want to get out with your exit strategy. But bear in mind, you're going to get higher drawdown. If you want something in the middle, there'll be something in the middle as well. But at the end of the day, it doesn't really seem to make a massive amount of difference. It just makes money. So I will pick something that's kind of in the middle, I think, to run it. But as I said, I might pick a couple of different variations. But I'll start live testing this hopefully next week. Just with very, very small risk and just see if the returns in forward testing match the back testing. But we'll see. Right, Bailey should be talking. Where is the economy? Okay, that's not Bailey. That's them trading. We don't want to watch that. We're not yet at a point to cut the base rates. Global inflation shocks are fading. So what we should see is kind of 10 or 15 minutes worth of that and then a move. But we'll just wait and see if he says something exciting. Let me just get the juice up over there. Really delayed. Yes. Wouldn't he be one to go for a drink within the pub? Interesting conversation, I suspect. anyway. So wait and see what comes out of that. But no movement at the minute. Right. Anybody got anything else I want to look at? Because I'm pretty much done. There's nothing else to look at today. He makes a rubbish mime. Mime? Mime or meme? Oh, hello. We got some charts. Nowhere near as fun as a Lagarde's press conference, is it? We don't get the man with the barrier and all that sort of stuff. It's just basically him at a desk. Boring. That's the UK. But yeah, so we'll see. Not really doing a lot at the moment. My EuroCAD's working nicely. Euro's dropping nicely. Someone's upset the euro by those things, which is fine by me. Higher than expected wage and service inflation since February should give us pause for thought. Shouldn't overinterpret. Risk to the global economy remain with the Middle East. Know that. I expect inflation to edge up later this year. So that would indicate that they're expecting inflation to continue to drop at the rate it's dropping or similar, but not to bounce before the end of the year, which again, bearish because it means that there's more chance of an interest rate drop happening sooner. That CPI figure is the one that we need to really watch out for. A June bank rate cut is not ruled out or planned. June, that's much, much, much earlier than forecast. So forecast was August, stroke September. June, July would be in line with euro, which would be bearish. Market doesn't seem to be paying a lot of attention to that at the moment, though. That would be... there are two more inflation prints before the June decision. So if those inflation numbers, at the moment we're running at 0.2. Ooh, let's go my pen. So at the moment we're running at 0.2 drop. So if we get a similar amount again, and we get down to 3, and then we get down to 2.8, yeah, I think that is kind of what they're saying is if it continues to drop at the rate we're going, we could probably see a June cut along with the euro. Highly unlikely. Highly unlikely. We're in May, so I don't think it's I don't think it's going to happen, but there is a possibility. So that's interesting. So just pushing back up again now on the euro, the pound. Euro pound coming down nicely. So that was your ADR hit today, look. So just undoing that move at the moment. More data needed. So it's the same as the Fed, basically data. We're just waiting for the inflation numbers to come out. So inflation, next inflation for the pound is on Wednesday, the 22nd of May. So that's 2 weeks away. So that will be, that's the yearly CPI. So that will be our next reading, basically, which will give us an indication. So if we get a nice big drop on that, i.e. a red number on forecast, that could mean that we drop rates a lot faster. So that's a lot more bearish than I was anticipating today. So could be moving into a little bit more of a bearish stance on that pound. We'll see. So back to where we started for the news. So just a quick V-shaped recovery move. As I said, not really any reason for that. Good progress, returning to 2%. MPC now sees second round inflation moving faster. So this is all good for rate drops. So much more of a bearish stance on this at the moment from Bailey. Markets, yeah, here we go. So yeah, market's starting to react now. He's still talking though, so typically we last sort of 15-20 minutes on the initial speech, and then we have the Q&A session with the press. That's where they poke the more prominent questions, which give us a little bit more guidance. So this is just a reaction at the moment to what he's saying, which is generally bearish. We need to make policy less restrictive, drop interest rates. Likely we need to cut the rates over the coming quarters. We know it's possible we will need to cut rates more than currently priced into the markets. Very bearish. Not good. I'm going to get out this pound US dollar. Just closing that Euro CAD at the top there, just to pay for that pound US dollar, which locks that profit in. This is a lot more bearish than I was expecting it to be. So the market might dump after this, after he finishes talking. So I'm just going to I'm just reducing basically my exposure on the pound. So I was 3 long, a little bit too much. So I'm just going to take one of those off. Still got pound New Zealand and euro pound. The euro's dropping nicely though at the moment, so that doesn't really affect me too much. No preconceptions about how far or fast we'll cut rates. All depends on data, usual stuff. We on the press conference? No, he's still reading, isn't he? So this is still his speech rather than the press conference. Possible we need to cut rates more than currently priced into the market. So that's basically what that spike was. Basically telling the markets you're not quite bearish enough as far as I can see at the moment. Yeah. You seem to be forecasting somewhere around about August, September. He's now talking June, July time. So you should have been a little bit more of a bearish stance than you are at the moment, basically, which is why that order comes in short, but we'll see. It's not over yet. So, but just in case, I'd rather be one less pound on board. Points to judgment on persistence of inflation. So the June rate cut is going to be CPI related, which we know. This is following the exact same stance that we had with the euro. If you remember, the euro was looking towards the end of this year for rate cuts. Then it got brought forward a little bit, August, September time. And then inflation dropped dramatically on the euro. We're down at 2.4. It has stagnated on the last change, but we're at 2.4. Very, very, very close to target. The danger is obviously that continues to drop that inflation number and you overshoot inflation targets. So basically what he's saying is, yeah, this is coming down pretty fast, the same way as the euro was. And look what happened to the euro. We came down to that level very, very, very quick. We don't want to be in the same situation. So we might bring our rate reduction forward. So bearish. But like with all talking heads, they say one thing, then 10 minutes later, they say the opposite. It could go that way, though. Inflation is being stubborn at the moment. Oh, okay. But it's not as stubborn as we thought. All right, okay. That's basically what you get. Talking heads, flip-flops. Why news is useless to trade. Not a lot of action at all. Right. So give it, I would say give it 10, 15 minutes or so. Start to push up again now, look. And then we may well get a decent move coming out of this afternoon. At the minute, it sounds like it's a lot more bearish than anticipated. So if it is going to go anywhere, there's a possibility we might get a fairly decent drop. However, what he's just said about market doesn't seem to have priced in much of a drop for the pound, they may disagree with that, in which case then there's no reason for them to do that if they've already started the moves. But if you look at all the pound pairs at the moment, we have very much for the last month and a half been doing absolutely nothing on a lot of these pound pairs. We are just flip-flopping around. A lot more volatility starting to come in, but it is overall a little bit more bearish than bullish. So this could well be the start of a drop, but the drop necessarily isn't going to be like that. It will be more normal. Yeah, because at the moment we're waiting for 2 more CPI figures before they make a decision. So what they've basically said today is, so far, you guys need to start getting short. And if CPI is going to continue to drop, you want to get shorter quicker, which they kind of know already. So we'll wait and see. It may do nothing from here, but at the moment, it's certainly a little bit more bearish than bullish. Who's he talking to? So we're in press conference now. So this is where the questions are coming in, where it tends to be a little bit more direct. She's still at university or something. She looks far too young to be a reporter, doesn't she? So yeah, we'll see what happens. That's another important thing there. There has been some decoupling recently between the UK and the US market rate expectations. So again, very much what the euro came out and said, Lagarde came out and said exactly the same sort of thing. We're not interested, as we have been in the past, in coupling ourselves to the US. Historically, US has always changed its rates first and everybody follows after. That's not the case now. And this is what Bailey's also saying now. We're not necessarily going to do what the US does. We're probably going to fall more in line with what the euro does, which means that we go first. Yeah. So again, more bearish than bullish, because we know the US is not going to be moving until the end of this year. So certainly got a good bearish stance on it. So at the moment, I'm positioned short euro. Kind of want to start to think about short only on the pound as well. Not necessarily just yet, but it's getting close. So with things like the market reverse alerts EA and position trader EA, turning those into short only mode on pound and euro pairs is not a bad idea. You're going to get a lot less signals, like that one there, for example. Wouldn't have taken that if it was short only, but obviously that one I'm in. So yeah, it's a good opportunity for shorts over the next few weeks potentially. That's what old people say. Anyone under 30 is a child. I know, it's weird, isn't it? Do you know what? I watched a film last night with Anne Hathaway in it on Amazon Prime. I can't even remember what it's called, but it's a love story thing. Yeah, Anne Hathaway. She's 40 now, 42. Doesn't look it, obviously, but yeah, 40 odd. Crazy. Everybody that when I was younger was a child is now the age older than when I had kids. Weird. Anyway, but yeah, she just looks a little bit, you know, like a university grad, but she's probably 30s. I can't tell anymore. Right. That's all I've already got for today. So just be aware of, obviously, the pound this afternoon. You might see some bearishness coming in. As soon as this press conference finishes, the analysts will get to work. The analysts will pass the data on to the desks, and then the desks will start to execute. So the reason for a drop would be all the banks suddenly going, yeah, actually, this looks like the time we should start. They'll all start together, which means you get a big spike. Quite often that will get undone, a la that. Yeah. So if you do get these collapses, they are often very short-lived or completely undone, because it is just the banks starting to move, and then they realize they've got a whacking great ton of cash and they take it back off again. So it's not necessarily going to be something that's going to go just, you know, elevator shaft move, but slightly bearish moving forward. So, you know, you could also have the other scenario, which is not uncommon, for the banks to drive the market up and everyone goes, oh, look, the news made the pound spike. Everybody goes long. They grab all that liquidity and run away with it. So they need to fill their orders, basically, and they'll take the market where the orders are. So if there aren't anybody down here wanting to buy the pound, which is likely, it will move up there. Yeah, don't forget, for them to execute their orders short, there's got to be people wanting to buy it. If the entire stance of the institutions is turning short, no one's going to be pressing that button. So the market has to rally up to go and find liquidity to drive itself back down again. So it isn't necessarily going to be one of those moves, but we'll see. You can never tell. You have to just wait and see what the market makes of it. But bearish overall. Other people talking now. So there you go. Right. I've got nothing else to discuss today. That's it. So I'll leave it there for the day. Bear in mind, we've got the Bank of Canada this afternoon at 4 o'clock. So you potentially got some Canadian dollar volatility coming in. Tomorrow morning, we've got the GDP numbers for the pound as well. So again, if those GDP numbers come out lower than expected, the Bank of England will want to drop those rates. Yeah. So if the economy is starting to struggle, i.e. we're looking like we're going into recession, you need to get that down. So another reason potentially tomorrow for a bearish stance, but it obviously could go bullish. Unemployment for the CAD tomorrow. So I'm on tomorrow afternoon at 1:15, and we'll be trading looking at the CAD unemployment numbers when the website wakes up. So yeah, 1:15 tomorrow afternoon, we'll look at the CAD unemployment rate and see what's happened there. Yeah, at the moment, market doesn't look particularly shocked by what has been said. So yeah, pretty non-eventful at the moment. But wait for that press conference to finish. That's when you tend to get that move coming in, and that could be any time in the next half an hour, depending how many questions come out. So just keep your eyes peeled on when that press conference finishes. And if there is a strong move, best usually to go in the direction of it. But we'll see. It may go absolutely nowhere. We'll find out tomorrow afternoon. All right, that's it for today. Anything else you need, let me know. I'll be back tomorrow afternoon. I'll be in Telegram and Discord until then. But yeah, just monitor P&Ls, bank stuff, the usual stuff. All right, have a good one. Anybody needs anything, let me know in Telegram, Discord. Otherwise, I will see you guys tomorrow. Have a good afternoon.